So, good morning, everyone. Welcome to the show. Today, a beautiful Wednesday, 29th of July. Let's start the show. Good morning. I see I have a couple of good mornings. Good morning, DJ Pro, Trader 007NQ. Good morning. Daily Impulse. Good morning. And last but not least, Podia. Good morning, everyone.
Hey,
So,
good morning, everyone.
Hi, Steve. Good morning again. And let's rock. One thing, first things first. Risk disclaimer, guys. No financial advice here, pure educational content. So do your own thinking. We're just here to provide some guidance and hopefully to teach you one thing or two. So let's roll. Steve, again, high volatility, plenty of things moving and going on. Guide us through what's happening.
Yeah, welcome, everyone. Welcome to the stream, you guys. For me, it's just like any other day, but of course, the main headline, it's FOMC day. You could say this is the one official day with the new Fed speaker. I would say he's getting
That's
to
the
the
one. That's the one. It's now
this
or never. That's the one.
it's now or never. So far, what I'm seeing online, Henry, on Polymarket and other statistical probability sites is we have about 70 to 75% chance he holds the rates. But then again, there's always a problem. There's always, you never know what's going to happen, you guys. I would say it's 50-50. In my opinion, it's a new Fed chair. He said he's not playing games here. He's not reading off the script like Jerome Powell was over the last decade when he was Fed chair. So this will be exciting. But, then again, I'm not trading it. This is going to be an observe party. I will be posting about it, what my opinion is, but I will make sure my trading is all done before the statement comes out, you guys. So let's just quickly see what's going on. But we are getting a few impulses actually this morning before New York Open. But before we get to that, you guys, let's look at the main headline, and that's FOMC. So what is going on today? Why it matters, you guys, how NASDAQ and other indices could be affected, because we all know, you guys are all looking at NASDAQ. Henry knows, he sees it with Perdia in most prop firms. Everyone's in love with it because it makes sense, because you do get the most amount of leverage with NQ when you're looking at micros or minis. Let's not even look at minis, micros only. So it makes sense why people want that extra leverage, but then again, are not able to measure the proper risk management on these instruments a lot of the time. So we will get into that later. But what is going on, you guys? It's interest rate decision today. Committee set to announce around 2 p.m. Eastern Standard Time. I know a lot of you have been going through a lot of FOMCs, but just mark it on your calendar. Make sure you don't miss it. We're human, you guys. Even I can miss it. This is why I write it down, pen and paper, as well as all my charts. A lot of volatility incoming, like we said, about 70-75% chance they hold rates at 3.75. But the big movements are going to come during the press conference. And like the new Fed chair said before, Henry, where, he's not going to go off the script. We don't know what he's going to be slinging in there, as comments. So far, the market has been down since last FOMC. Some bearish price action. Could it be priced in? Could it not be? We don't know, you guys. Let's trade the reaction. Let's be calm and know how money is flowing across all indices, also the economy, which is why we bring up these economic events, you guys. If they hold, borrowing costs are, staying where they are for businesses, for consumers, and those massive AI data centers that Henry loves, that they're building out all across the country, especially in my region, which, there's a lot of back and forth going on. Who knows whether they'll build it or not. In your area, Henry, I don't know if they're planning to build any data centers. we'll see.
They are trying.
They're trying. So you are hearing word in your area. That's interesting. Yeah,
they're trying. And no, but let's dive into it, guys. So as Steve already said, today, big day. Actually, let's shift gears. 1 second, please. Share screen.
man, guys, like a surprise hike, would raise the cost of capital overnight, so that wouldn't be good for markets, especially for these AI data centers, and also push treasury yields higher. And Henry will get into that with the treasury yields, the bonds, currently where they're sitting right now, looking into FOMC. That will be important as well, you guys. So keep that in your chart. And yes, so yeah, let's see what Fed Chair Warsh has for the markets for September. Then again, for me, observe party, get my trades in and out before this happens. But yeah, what are you seeing, Henry? What are you thinking?
Yeah, I mean, I would say it's been already slowly priced in, right? That it should be at least, there should be no hike and no cut. So in a way, it's what I would say. If something happens, I think this could really catch the market off guard, right? Like one way or the other. So if they hike, then obviously the market will not expect this and will not like it. If we cut, but if they cut, then market will obviously love it, and then everything will be on the table, right? Because I'm gonna have a major rally again. So yeah. But let's talk through the topics. So as Steve already mentioned, Fed decision today. So guys, be aware of that. It's huge day for the markets. Everyone is watching it. So just something to be aware of. AI chip sell-off. Yeah, our friend KOSPI, and all the traders always asking me like, hey, why do I care? Because you should care. It's consists 60%, almost 60% out of Samsung and SK Hynix, like both huge players and AI game. And as we've been talking about for quite a while, right? So that yesterday we did not stream limit down. Today I think overnight was also almost a limit down or close to it. So major gap down, and you cannot ignore those things, right? Because the world is interconnected. AI is a global play. So be aware of those kind of things. And we have been talking about this level. And actually, you could say something maybe for your chart trading skills, chart analysis. Like if you say this is a leg down, then this could have been considered basically a bearish flag and then a second leg down, right?
Yeah, the measured move. Let's draw it out, Henry.
Let's draw it out.
We have to draw it out. Where does it line up
moves.
to? Yeah,
we love the measured moves. Yeah. So basically, all the way down. Well, it looks scary, right? It's it looks scary. Basically, lows of not lows, but 2025. But this just shows you how fast we went up, right? So it's basically the previous. Yeah, it's the all-time high. So basically, retesting the previous all-time highs, you could say, and I think that's a fair target to be tested. So I'm making a prediction. If AI is getting a hit, then we're probably gonna retest the previous all-time highs as an area, and something that Steve loves a lot, we still have an open gap here. And as you all know, or some of you might know, might not know, markets love to retest the gaps. So, and this one is a big one. So now I have basically two big support areas here, right? One from the previous all-time highs, and now one from the gap. And this level, I would really like. I would watch them out, right? That's what I would be watching for.
Yeah. And remember, you guys, just quickly saying on the long term, the reason why we bring up these gaps, you can also use this on your short-term analysis as well, because these are overreactions in the market. A lot of time pre-market when there's not a lot of volume, and then when New York comes in, it fills up those gaps. Whatever you guys call it, whatever the terminology, this has been happening since day one of markets. There's a reason why they act as magnets on the long term as well as the short term basis, you guys. So you can always use this and wait for the reaction. Once it comes up to the gap, use your technicals then. Never blindly enter. And yeah, sorry, Henry, just go ahead. But like
No,
I
no
said,
worries.
from going from long term to short term.
Yeah, basically just a little lesson here, right? So the previous this year's high, all-time high, is how I like to draw it in analyst way. It's basically acts as resistance. If we are underneath it, once we break it, it's my new support area. So we never came back to retest it, apart if you have the small dojis, right? But therefore it was my support area. Once we went above, then we could not pass through. And then once we break above, it obviously becomes again support area, right? So this year was acting as support. So we did not really get tested to the point. And now we basically broke through, right? So this gap, you could argue we broke through the support area, more or less, of this prior support level. And this is what I would watch out for. So if I would expect a bounce, that's my guess, like educated guess. We will retest the gap. We will retest either the resistance area now or the gap, or maybe even both of them. And this is what I would need for the pattern to be bullish again. Like bullish, we're talking here, guys, bullish on a big picture, right? We don't talk bullish on the intraday level. That can be happen every day. We're talking here on a big level. And yeah, this is what we are trying to achieve on this channel, to show you a little bit of analysis, bullish and bearish, not only one-sided and buy every dip, but also to show you what can happen, right? And if we will not be able to break through, to break above, then a bounce at this point further to the downside is more likely than not. So, and I'm not making predictions here. It's basically just chart analysis and also following the flow, staying like with the short-term trend, right? And if the trend is to the downside, why do I want to fight it? And this is how I trade. But nevertheless, guys, so back to the topic, NQ, it's what is interesting for us. So KOSPI, what was it all about? Well, if it's super important for AI, then NQ has been basically an AI game for the last 2-3 years, right? It was all about AI, and that's the reason why we're standing here where we are, because it looks wild.
Hey, you gotta clean that.
Because,
Clean it all, yeah.
Yeah, I have to clean it up. Okay, wait, let me clean it. Drawings 106. All right, so clear plate. All right, so again, and guys, with time you will see I always making the same things over and over again. This is my style. You can do whatever you want, but this is how what I learned over the years. And yeah, so this basically acts as my current support area and a near-term possible target for a down move. This could be my kind of weird. Sorry, that was wrong. That could be my shoulder double head. We talked about it in the last stream. Shoulder double head shoulder pattern, right? Again, measured moves. I love the measured moves. They work more times than not, but don't take my word blindly. Do your own back testing. And another scenario I talked about over the last month, basically when we have been here, somewhere here, like a month ago, it's a diamond formation. Check it out, Google it. Diamond formations are not that common, but they happen on the tops and bottoms. And if you basically draw it like this, then with plenty of imagination, you could also say that it's a possible diamond formation at this point. And that would be sitting right in the top, and therefore confirm a reversal pattern on a big scale. So just something to be aware of. But for the time being, I'm only looking at this beautiful 28,600 level here. And this is on the short term, my level of interest. So it used to be support area, and now it acts as a resistance level. So what do I want to see? If we are not able to break through, then it's a possible bounce. But if we break through and go above, then it will be a bullish scenario for me again, right? And this is something that you need to understand, guys. It's not about long-term targets or long-term analysis. It's really more that should give you a sense, a feeling for the market. Where are we? So if this is my line in the sand and I'm saying above we're bullish and below we're bearish, this increases your odds a little bit, right? So, but you cannot take it, you cannot trade it blindly. So at next step, you would zoom in on 15-minute chart, 5-minute chart, minute chart, depending on your strategy, what kind of style you're trading with. And then from there, you would do your trades as they should be stated inside your strategy design, inside your trading system, inside your trading plan, right? So this is my setup: A, B, C, D, all kind of things. If you have questions in those regards, a link down in the description below. You can reach out either to Steve or to myself if you have any questions. Otherwise, Steve has also a really good newsletter. So hit it up, see down in the description below. Follow this channel, subscribe, turn on the notifications because we don't go online daily, but every other day. So you get notified once that happen. And yeah, try code pre-market to get 25% off and give Podia a try. All right, let's continue. So basically for a time being, how would I approach this day? Well, after we have seen that KOSPI is basically down again, 6%, I have the feeling that the market is weak, right? And now with Fed around and Trump, actually, I can just basically forgot to mention it. Basically, just a couple, like half an hour ago, stated that there will be more strikes back on Iran. It doesn't really help the market, right? So oil spiked up to over 6% now, been sitting at 3% now, over 6%. So obviously the market doesn't like it. And this is where you get all kind of different scenarios, right? So we're looking at oil going higher, not good for the stocks. KOSPI is collapsing, not good for the stocks, especially not for the big tech and AI play, right? So that's a weakness. Possible rather hawkish outlook or hawkish statements from the Fed, also bearish for the stocks, right? So, and if you bring it all together and you see a weak market, basically broke below 28,600 on Monday and last Friday, and has not been able to go above, and you bring it all together, then you can say, all right, we are still bearish. Doesn't mean that we will remain bearish the whole day. We might see a V shape. We might see a huge pullback, basically that takes out yesterday's highs or this week's highs. So everything can happen, but overall, you can make the assumption that the market has more probability to continue its trend to the downside rather than just having a blind spike to the upside, right? And this is what we're trying to bring across here, that we're looking at all kinds of different scenarios and those things. Okay, Steve, your take on this?
Yeah, like you, I was going to mention as well. We had that impulse with Trump on Iran, but yeah, I can bring us an intraday level soon, you guys. But just a quick summary, just to end, since yeah, it is FOMC day, you guys. So just remember, when Warsh comes on, it's his comments. Any concerns on AI spending would cause, rising energy prices, also with Middle East tensions. So you're gonna get questions all over the place, regarding Strait of Hormuz, rates, AI, so many topics right now. Seems like every topic will be a trigger point. So just keep that in mind, you guys. It's not financial advice, but the only advice I can say is just to stay away from markets once he comes on the podium. If you really have to watch it, observe it. If you really have to put on risk, maybe just on one micro, just to test out some areas if it is coming to your area of demand, or if your area of supply, whatever your bias is. Only advice I can give is lower your risk, you guys. Don't rush into it. If you really have to put on a trade, put on a micro, not a mini. Stay away from the minis, my friends. Right, Henry? But then again, that's all we could do. Not everyone listens. You'll still probably have people putting on minis during the press conference at FOMC because the volatility is high, whether you get lucky or not. Just because, let's say you hit a big winner for today, doesn't mean the same result is guaranteed next FOMC, you guys. So yeah, just be aware. It's gonna be a lot of escalation with indices. All assets will be affected. Statement and questions will go on for about 30 to 60 minutes until the close of the day. So always stay locked in, you guys. And let me just quickly, look at the chart. Or you know what, Henry? If you want to continue, because we did have that impulse with Iran with attacks on U.S. targets in Jordan. So the U.S. is. Anyways, you guys, this is politics. We're always neutral. Whatever the headline is, we need to reply on it, and then just look at how the market is reacting to it. And I will zoom in later, give you guys the level that it's displaying on. We do have New York open in about 9 minutes, Henry. So you can go ahead because we have about a few minutes left until the open, which will also mark out. And it's actually very interesting as well where this impulse landed, because it's showing signs where NASDAQ is actually very interesting. Like, just quickly want to mark out you guys the market ranking, where you'd think all this bearish news, all this bearish sentiment on KOSPI, on AI, you would think NASDAQ would be the weakest indice for today. But actually, NASDAQ is one of the stronger assets reacting to all these headlines. Of course, they could change. This is why it's a live market ranking. I put on my charts and I showcase you guys. But for now, it's actually very interesting, Henry, how the AI related sector is reacting stronger to the news so far this morning. So anyways, you can go ahead. I just want to mark that out and show you guys how things can always change at any time. Be aware, never get married to one bias, never get married to one setup. If things are going against you, always play defense and survive in this game, my friends.
Yeah, I just want to showcase to people that what happens many times. So we had basically the last, let's count, 1, 2, 3, 4, 5. We had basically the last 4 days were all in the reds for NQ, right? So NQ had 5 bearish days. But Dow Jones has been actually rallying, especially yesterday. And so therefore, it doesn't surprise me that Dow Jones might see a shift or some profit taking or some reversing position. Maybe some people were trapped on the wrong side or whatever, or they speculated that there might be de-risk in Middle East, right? And now with again with more escalations and ceasefire over, at like the unofficial ceasefire over. It actually doesn't surprise me that we see YM today stronger to the downside than it's the case for NQ.
And can we even call it a ceasefire anymore, Henry? What should we call it?
I have
last few weeks, you guys, there's been so many names: MOU 3.0, ceasefire. What should we call it right now, my friend?
Yeah, I mean, they just stopped bombing, right? They just stopped the attacks, and then Iran stopped their attacks too. Like, all right, if you don't attack, we don't attack. And so I have, like, at one point, I also have no idea. And I think people are getting a little bit tired also of the whole thing dragging on without any path forward, right? So is it something bigger? Is it something that's lasting? So, and therefore, the market is basically all over the place. Another thing I want to highlight. Oh, actually, let me make the comparison against NQ. So we have seen on S&P, we were looking at this pattern, right, over the last couple of weeks, basically a bullish continuation pattern, and we broke underneath right here. We retested it again, tried to pull back like to the upside, we're not able to do it. Then on last Thursday, broke down, and now we're sitting there making a kind of a range. You could argue that's more likely than not a continuation pattern to the downside. And it would actually also kind of confirm the direction of NQ, right? Because you have always this correlation between S&P 500 and NQ. And NQ has been obviously the leader here in terms of chart patterns. So therefore, you could argue, if you want to make the argument, that ES will follow on the path, like basically being the laggard, and at one point catching up to the move of NQ. So therefore, my intermediary target here is basically this previous low from June for the time being. And I think if we break through, if something bad happens in terms of news, no matter what, I think we can go down to this area super fast.
Yeah, and today's the day, Henry. Today could be the
There's the
day
day. Yeah, I
that
mean, you
FOMC. Yeah.
never know, right? You never know. And so yeah, just guys, be aware, right? So you have the scenario. In the same time, if you see that the market starts to pull up again and it breaks this range to the upside, then anything can happen to that, and we can see a bullish, super strong short squeeze, right? And this is what we try to showcase you, like always to consider both sides and be aware of both sides. So if you break above this range, then I can tell you one thing: many people will be caught off guard and wrong positioning, and there will be a short squeeze that will probably catapult us to new all-time highs. But if we break below, then we also have this wide space here of almost 200 points to the downside, and the next target is basically the support area right here. So be aware of these scenarios. So I have 2 minutes or 3 minutes before the market opens. Let me quickly see what was going on.
Yeah, we're currently retesting quickly, guys. Just the impulse level of the headline we got with Trump and Iran, currently 27,940. And this happens like clockwork almost every single day, Henry. How many times we mentioned when we get these pre-market impulses, we get the retest either right on New York Open or just after New York Open, because this is what the market does, you guys. It needs to retest these key areas to see if whether buyers or sellers, who's stepping in, or sorry, who's stepping out. So the question is, if there's going to be more bearish price action, sell pressure, what does that mean? It means the buyers are stepping out. They don't like this area, and they're like, no, I want to. You're going to step in the next area lower, the next demand zone. So currently, right now, yeah, we're retesting 27,940. You guys, 2 minutes into New York Open, just be aware.
Yeah, I mean, gold is a bit tricky, right? Because gold had such an impulsive move down. So you could argue, all right, is this move one, move two, basically leg two, and this is already leg three, or where do we start the count? So I'm not sure about that in that scenario, but the logic remains: leg down, range. It's a possible continuation pattern to the downside, right? Just saying, doesn't mean that it will happen, but be aware if it happens, then we might see a proper push down of another leg. At this point, I'm not sure that I would not make the measured move too big, something smaller like this little leg here. And actually,
oh, come on, Henry, don't be afraid. Don't be afraid of the full move.
Yeah, I don't want that I'm like getting the reputation of that everything goes to zero with my measured moves.
We'll just bring up SpaceX. You might have to bring up SpaceX.
Yeah. I was like, actually yesterday I had the chart open on the back. Oh no, where's my beautiful?
I just redraw it, but it's funny, you guys, because yeah,
here we go.
Weeks ago when the IPO first came out, we drew the measured move, Henry and I, and we're like, there is no way it's going to go down there anytime soon. And how long has it been? Just about a month, and we've already retraced 50% of that measured move. This is how markets are, you guys. Always expect the unexpected, and it surprises me every day what can really happen. And look where SpaceX is right now.
That's crazy.
Wild.
And yeah, so just something to be aware of. But it actually shows me that market is de-risking, right? Market is also de-leveraging. It is also something I want. Oh, actually, market opened right now.
Yeah.
NQ. Let's zoom in. Intraday.
Yeah, and just testing.
We are sitting right in the middle of the range, right? So we're sitting right in the middle of the range, guys. And this is something you really need to be aware of. And like we're sitting basically right in the middle, plus minus. So be aware of the price action. Take your time, don't rush in, and especially on Fed days, you never know what happens. They might push it to one side or the other and then reverse the whole move in 15 minutes prior to the news itself, prior to the press conference, prior to the number. I have seen it so many times. Market's been a bullish market they sold off 2%, and then a couple of minutes before the press conference or before the number came out, everything reversed, V-shape, and then it just chopped around. So be aware of any kind of fancy moves. So always have a stop loss in place, be aware of the volatility. And it's guys, to be honest, it's a hard market. Like I myself, in the last 20 years, if you want to say it, since '08, after the '08 crisis, I would say COVID was at times super hard to trade, especially maybe the first half a year or something, when everything was just like news came out from all sides, lockdown, no lockdown, extensions. That was a tricky one. But now it's completely unforeseen. So in a way, even COVID has been more predictable than what's going on right now.
Yeah, they turned on the money printer. Once the money printer was turned on, there was only one direction it was going. But yeah, like Henry said, we've been consolidating. Sure, we got the squeeze a few months ago because market was forward-looking. But now the market is uncertain on the path forward. It's no surprise that we're coming back into balance, and we are close to retesting those highs that squeezed out of on NASDAQ.
Yeah,
right down below in Henry's box.
Yeah. Let me quickly finish up so I can give it to Steve with the correlation plays. And so basically NASDAQ, right? Everything can happen. Maybe one look on oil. Oh, actually, yeah, yesterday we did not stream, but we completely took out our 80s level.
Took it out, yeah.
But opened with a gap, right? Open with a gap right at the 80s level. Those round numbers, guys, we're always preaching them. We're aware. So next target for oil is the gap here. So this needs to be taken out, and then obviously above, right, over the 90s level. And once you start to watch the show for longer, guys, over a couple, you will see there's a pattern and how the market moves, especially on the big picture, on the daily chart for our chart, weekly charts. And it always goes from level to level. Trying to find what's the fair price, especially we're talking about the big players here, right? Not retail. So yeah.
No, never retail. Even though I saw actually just the interesting statistic of the options market, of course, not the futures market or stock market, because it's still less than 5% of retail volume. But retail volume in the options market has come up in the last few years.
It's crazy. Yeah, it's crazy.
And I think it's close to 25% now of total volume. Isn't that wild? So
yeah,
I don't know if they're able to get an edge, or if it's the zero DTEs that are popping up in volume as well, where people are just going for those crazy plays. They put in
it's just gambling. It's just gambling. And the problem is when they introduced the zero DTEs, it was the perfect timing, right? So it was like the market has been flooded with liquidity, and basically just the game in town was just buy every dip with zero DTEs. That's all they did, and this, I think, how it became super popular. But yeah, never mind, guys. 90-60 still in play. Once if we break it above, then we can see a huge spike up. And if VIX starts to spike, then you can be sure there will be tremendous consequences to the stock market. So have an eye on VIX. If we have enough monitors, maybe have it like on a daily, or daily I would say is the best one, because you don't trade from it. Don't consider it as a correlation play. Really have in mind that as long as it's suppressed, the market is more or less stable, even though it's grinding down slowly, like 1%, 0.7% per day. But if it spikes up, then you can have this tremendous days, right? -4, -3, -2.5%. So just something to be aware of. And the magic number is also basically 20. Maybe we can take this low here, 2070. But basically everything that spikes above 20, 21, it's going to be will have super strong moves. Yeah, triple Qs. Again, also doesn't look pretty, but similar story as with NQ. SPY sitting in the range. I mean, they're waiting for Fed, right? So everything can happen. There will maybe some profit taking here, maybe they're trying to push it hard, but yeah. Okay, SpaceX. Let me quickly. I wrote that Microsoft and Meta earnings tonight, right?
Yes. Yeah, we can't forget. Sorry, Henry. There's so much going on with Iranian news, with FOMC, and then we totally forgot earnings because Microsoft is still a big player, guys. Microsoft hasn't fallen out of the list like Meta and Tesla have, because we had the Meg 7, but yeah, Meta and Tesla have actually fallen out. Market cap is shrinking there. I don't know what Elon plans to do with that company. Maybe join with SpaceX. I don't know. We'll see. SpaceX has also fallen out of that list before. I think SpaceX got as high as 5th place when it was at its very peak of the IPO, but it's fallen, so it's fallen out of the list as well. But yeah, Microsoft, very important, you guys. Keep that in mind. It's going to happen during the meeting as well of FOMC, so just be careful.
As we said, right? So much going on, so it's super hard to trade. Therefore, I repeat here myself, it's size down, increase, stop loss. This is what you do. This is how you play it in those times, guys. It's basically risk adjusted, volatility adjusted, risk sizing, risk management. So you never trade the same size all day long on the same distance. It needs to be adjusted. If the market opens up with already a 300-point range and it was made in a matter of an hour, then your 10-point, 20 ticks stop loss and NQ will bring nothing. It's going to be eaten in 2 seconds. So be aware of that. Yeah, but nevertheless, for Microsoft, let's say what's happening, what might happen, sitting right in the middle of the range. So if we manage to spike up above the resistance level, let's say 405, right, then obviously it will have a net positive effect on NQ. Should, at least in theory. You never know today. But if there's a huge breakdown, then in considering KOSPI and considering the path of NQ, that might drag it down, right? So be aware of that. And what did I said? Microsoft Meta, yeah. Meta also a heavyweight, even maybe not as heavy as it used to be, but and this is the interesting chart that we had, like that we already drew back in month, 1.5, 2 months ago, right?
Was that the measured move?
Yeah, it's a measured move, like to the upside. And so yeah, but I actually Meta has one of the best patterns so far for me, because it's like 1, 2, 3, 4, 5. So it really has accepted textbook like all the levels at trend lines, right? So I would say Meta has a really beautiful chart pattern here, textbook. So if we break above, then you see the measured move to the upside. But then we're talking here about, like, I think for this to happen, we need a rate cut, we need Ukraine stop, we need Middle East stop, we need I don't know, another extension of capex, or we need another QM, maybe a hidden QE, sorry, a hidden QE in a way.
You're asking for so much, Henry. Oh my, that's a full
yeah. I'm sorry. I'm
plate
just saying. Yeah, but look, I mean, it's also basically
I
a 100% move up, right?
Yeah.
So yeah, but guys, that's a big but. But if we break below, then there's so much volume position to the upside. If we break below, then I even don't know. Probably first target would be the gap close here again. Guys, see a pattern or a gap close.
It's always the same.
So yeah, I'm at times I'm bored. I'm boring everyone.
But you guys, this is the key here. Enjoy the boredom. This is what you need in your trading. Don't go for the crazy, exciting. Enjoy the boredom. Accept it. Journal it. We can get into the journaling later as well. But yeah, Henry just, because this is what Henry and I do. This is what we do to also benefit ourselves, is we talk about it out loud. And look, he just caught himself. Oh, I'm bored. No, but that's a good thing. Be bored about it. Accept the boredom, Henry. This is what you need.
Yeah, but we have but if it's boring for the viewers, they rather click to someone who goes all in on every trade and burns through. No, guys, again, at Podia, we're having a focus on the long-term success of you. So therefore, we're not doing any kind of fancy trading patterns here and things like that. So be aware, trade responsibly. Trade cautiously, size down if volatility increases, and instead of predicting or guessing, wait for the market to show you its hand and then follow along. All right, what else do we have? So this is NQ and Microsoft and Meta. So be aware of these. What happened to NVIDIA? Yeah, huge sell-off on Monday, and we're still trying to stabilize there. But I mean, it's what I said, right? KOSPI, even though, guys, it's far away, we don't care. But as NQ traders, we should care because the whole AI space is so interconnected across globally. If the dominoes start to fall or the card house starts to fall apart, it will probably start not in the US. It will start somewhere else, and will be like a warning signs that you can see in advance. Doesn't mean that we might see another leg up, right, and another push up. But nobody knows so far we can push the thing up, but just something to be aware of. All right, last things for today, from my side at least. 2-year, still consolidating. Again, as shown here, if we break above, then this will also have consequences for the stock market, because then, refinancing gets more expensive, debt gets more expensive, especially with all the capex plays on being financed through debt vehicles. For AI, gets more expensive, so less likelihood for this one, at least in this regards. And as you can see, it's currently it's quite heavy based on all kind of different mechanisms. But this is how the stock market works. This is how the markets work together. It's many different puzzles, right? It's not just like you watch NQ on the 5-minute chart and that's it. No, on a big picture, this is how the market moves. 10-year, yeah. So same. Once we break above our resistance area here, the orange one, then it will also have consequences. For the time being, still had a gap down on high yields. And sometimes high yields are actually the leader in terms of turmoil. So if you see a huge move on high yields, and let's say if it falls down, then it might also have consequences for the stock market, because then you know, like, all right, something is brewing, something is going on. And over the last years, a couple of times, it was actually the leader, and it took the market like a week, sometimes 2 weeks to catch up, but many times not. So therefore, I have it open just for you to be aware of why I have so many things going on here. All right, that's from me. If you have any questions, guys, reach out. Description down in the link below, either to Steve or to myself, if you want to explain something, or you can also ask us comments and down below, and we can get back to it. All right, Steve, over to you.
Don't be afraid, you guys. We have the pretty Discord. Ask questions there. You can also hop into my newsletter. I provide the weekly templates completely free, you guys. I use this every day, but before actually, Henry challenged me to the pen and paper, because before I would always type it out digitally, my plan, my checklist every day. And then, months ago when Henry and I were speaking, he's like, no, Steve, do the pen and paper. So you know what, Henry, I'm doing the 30 days pen and paper, because this is going to stick into your mind a lot stronger. And, I've done research into this, and, I totally agree, because, you do it digitally, you type it out, your checklist, your plan. It's much quicker, much easier, but to do more work, to write it down, pencil or pen and paper, I feel that the output will be much greater, especially if you keep the consistency. So yeah, join us, you guys. Never be afraid. And thank you, Henry, for that. So that's what I'm doing. Right. That's my challenge for this month for myself.
Okay, Steve, I'm going to re-challenge you for the next month and for August to redraw the whole day of the 5-minute candles or 1 minute
just
candles.
Take it. I have the pen and paper, so that's enough for now. Okay, I'm challenging myself for the full month. Just take it slow. But yeah, you guys, all jokes aside, let's get back into the markets. Why do we bring up these impulse levels? This is a live example right here, you guys. 27,940. Iran, Trump pressure, whether it's good or bad, it doesn't matter. The market, I wouldn't say exploded, but increases volatility right around, it was close to 90, let's just say 100 points pre-market. We are retesting it now, New York Open, and now it's struggling. It's struggling in this area. And this is the reason why I bring it up, because headline risk, geopolitical risk, there's nothing stronger. Because markets, this is the bias you could create for today. Markets are still figuring out, okay, where are we going to send it, to the upside or downside? Are this going to be more buy pressure, or is it going to be more sell pressure? And this happens almost every single day, you guys. Sometimes pre-market, sometimes post-market. I don't always have to wait for these impulse areas to play out, because a lot of times it can happen a few hours after New York Open. But when it happens pre-market, it makes my day much easier, you guys. And low cap price is struggling. We had bearish price action. We got the retest. It doesn't mean we have to reject, but for now we're rejecting close to we're only 15 minutes after open, you guys. So let's calm down, Henry. We're only 50 minutes. It's only the opening range. For me, I like to wait for at least half an hour, because if I wait half an hour after open, that clears out all the news that comes out. And for today, did we have any news even on the lower end? No, we actually had nothing. We have oil inventories later, but nothing in between, because a lot of times we have news, you guys, in between New York Open and that hourly close. But today we have nothing, because what do we have? We have FOMC later. So my plan is to do my trading, close everything out. Even if I'm still holding a trade, let's say close to FOMC, I'm closing it out, you guys. I'm not risking it, because you've seen those candles before. We can spike up and down, completely miss your TP, and can also miss your stop loss. And then you guys are emailing Henry, what happened to my pretty accounts on FOMC? Completely missed my stop or my take profit. Hey guys, that's the risk. If you're holding on to your position at that time, that's on you. That's not on Henry or Purdy.
Yeah, but maybe one thing to add here, right? So we are working with TraderWeight NinjaTrader, and they are both regulated entities in the US. So it's doesn't get much more compliant than that. So all the trades, all the execution, it's on their side, not on ours. So we can basically do nothing in this regards. If there's like an outage and technical issue that we are aware of, that we got informed, then we can do something. But if there's like a regular volatility and during high news events, we can do nothing, right? It's your own risk. So therefore, and Steve has chosen not to trade those kind of events. And my recommendation is, as long as you're not a sustainable, consistent, profitable trader, don't do yourself a favor. Don't trade the open. Don't trade high news events. It's basically just gambling. You can also just draw a coin and say, all right, all or nothing, but this is not the way to do it. So again, do your own thinking, never trade, never follow anyone who tells you to do any direction, because nobody knows what will happen.
Nobody knows, you guys. And you could say, the market is the house. You go to the casino, you will probably have a better time making money at the casino than the markets, you guys. Remember that. So that's why we keep it professional. We always write down our plan. We're always focused. And what are we seeing for today, guys? So far, NASDAQ is rejecting off that impulse we mentioned. We're down about 100 points right now, but lately 100 points isn't much, because volatility has been soaring, especially the range. I don't like to put indicators on my charts, you guys, but the only indicator I sometimes input on TradingView is the ATR, average true range, because whenever we have a spike, I like to see that if the range is exceeding the average points for the day. So far, what are we seeing? NASDAQ being the strongest ratio. And you know what? I think things might have changed, you guys, because I look at the ratios because it cuts through the noise. It tells me, okay, who is leading, who is lagging. Is it NASDAQ tech AI heavy, or is it the small caps and Russell 2000? So I don't, not too many of you trade Russell. I don't trade it too often either, but it's always good to showcase and see where the spread is on the charts. So this is my ratios, you guys, where I'm comparing NQ to ES, Dow Jones, and Russell 2000. And it's very interesting right now, because we are actually close to neutral territory on ES. Dow Jones selling off a lot harder. This is what's showcasing me where NQ is much stronger than Dow, and then back to even and neutral on Russell. So if that's the case, then I will leave it with NASDAQ being the strongest. And it's interesting where we're selling off and it's still the strongest asset. So that's kind of giving me a glimpse, okay, with ideas where If I'm looking for long ideas, I will maybe only look at NASDAQ if it's able to show a bit of a bounce, some strong volume. But we have now, it's so far, it's a falling knife, so I'm not entering blindly, guys. I'm still waiting. So now the NASDAQ is selling off. What are we going to do? Let's look at the risk to the downside. As you can see here, we have the low from yesterday, but for me, this is not good enough, Henry. I need to see a strong New York open from another area, another day. It seems like I have to look at another month, and we're looking back in April. And we haven't looked back in April for a long time. So let's look at April right now and see if my risk to the downside would make sense. And this would be, I believe, let's mark it out here. This would be on, just give me a second, you guys, doing live with you. Nothing of this is prepped. This would be on Wednesday, 9:30, and this makes sense. This is our risk to the downside, you guys. Why does it make sense? We had a few bounces. This is New York Open from Wednesday, April 29th. We had a strong splash of volume, retested once, twice, and then we were off to the races. So this is a key level because it, as you can see, you guys, it acted as strong areas of support, not once, but twice, and then it carried forward for a few months. And now we are close to retesting this area. A few months later now, end of August, yeah, it's crazy, end of July, almost August, you guys. Where did the summer go? So this is my risk to the downside, my pivot. Wouldn't be surprised if we took out these lows and hit that area below. So this is, and look, Henry, look at that, almost a round number, 27,500. This is what I love to see, you guys. Big hole numbers, strong areas that like to get tapped. You could say levels, psychological levels, areas where big traders are looking at, also small traders. We are all retail traders, you guys, or independent traders. I like to call myself independent trader, and I love watching these whole numbers because these like to get tested as well. Not only gaps, but whole numbers. So this is my risk to the downside if we continue the sell-off. And what I'm going to do right now is draw out the measured move, you guys, all doing this live on NASDAQ. Let's measure up. And where we're seeing, this is, and then, yeah, perfect. Right around 28,380. Is this lining up with the New York Open? Almost lining up with the New York Open, Henry. But yeah, this is what we're seeing right now. So keep this in mind. Anything can change, especially before FOMC. We can still have some news, you guys, whether it's from Trump, de-escalation news, ceasefire news, MOU. You never know what's going to happen. All we know is the FOMC is coming up. So always good to protect yourself and see who is leading, who is lagging behind. So far, NASDAQ, ES, and Russell are quite neutral. And because YM is the weakest, I want to showcase this as well and see where YM is. Look at this, just straight sell-off, you guys. No support on YM. This is why I bring up the market ranking. And like Henry said earlier, it could be some profit taking because Dow Jones has been a lot stronger for a few weeks. So it's no surprise we were getting a little momentum shift with the money flow out of Dow Jones into the other indices. This is how it happens, you guys. People think, oh, if Nasdaq is selling off, it's going to cash. No, it's not going to cash. It's rotating asset to asset. This is how market works.
Yeah, but that's also the thing, right? If people are sick and tired of volatility and news and they don't see a clear path forward, and my assumption would be if we don't see today a rate cut, but rather neutral to hawkish rate hike, then it could be that some people will take off the money and put it into cash and say, you know what, I go on vacation. I come back in a month's time for September, and then I'm gonna reevaluate the whole thing. Because there's some, especially in the prop space, that people forget that how the market moves. It's because we are so stuck inside our intraday trading. But it's just a small view of the market dynamic, right? It means nothing for the big money, for the big flows. And if nothing changes and we get a rate hike or neutral with a hawkish outlook, and the whole situation is getting worse and worse, and Q with everything, then we might see just a shift of money flows. Basically, people going into
That's how it
cash, and
is.
then things will just escalate.
Yeah. Now everyone's like Warren Buffett, you guys, where he just sits on billions and billions of cash. And who knows if that's completely true as well. He could be sitting in treasuries and bonds. We don't know the whole picture. No one knows the reality. But what we do know is that majority of banks and hedge funds, they rotate from asset to asset. They're not holding cash because they can't leverage cash as much as they can leverage these assets and naturally go up. Because as we know, with inflation, fiat is diminishing, Henry. So why would the banks and the hedge funds keep their cash when they know it's diminishing return? And think about that, you guys. Anyways, so let's get back to the charts. So this is my measured move on Dow Jones. We had the geopolitical risk, pre-market, map that out on all indices. And what do we have below, Henry? Look at this gap. Never got filled on that. It never got filled. So I wouldn't be surprised at one point today or during FOMC. No financial advice, you guys, but it's looking towards that direction. If this gap is filled, because markets don't like gaps, they want to rebalance price structure. And then when the time comes, when it enters this area, there's no guarantee on a bounce. There's no guarantee on a sell-off either. It could just consolidate. So really, we have three scenarios: either a V shape, or just plow right through, enter different levels to the downside, or we just consolidate for a few days, you guys. So yeah, there's three scenarios. So don't blindly enter because you might get chopped up in this area, or risk the FOMC volatility coming in later, and then they just map out the measure move to the upside. Pretty big gap, pretty big spread on Dow Jones, but with this asset likes to move in a certain direction, it will not slow down. And this is the risk to the upside right around here. I want to zoom out and make sure this level also makes sense. And yeah, this is close to the all-time high from July. Tapping this here. Also, we have a New York open, so this makes sense. Heavy area of resistance, heavy area of supply. So my risk to the upside is good there. So this is what I always like to do, you guys. Create the pivots, create the scenario. What are we doing? It looks like Dow Jones is selling off, wants to fill its gap. Strong or the weakest pair of the day. So I keep that in mind. This is on my list. If I'm looking for any short ideas, I'm only looking at Dow Jones and staying away from the other indices, you guys. And that's what we have so far. And then did we have any news, Henry? Because yeah, we're having a strong sell-off right now. Just want to double check if we had any news lately. No, nothing major on my end. Of course, we don't have the Truth Social Premium, Henry. So we don't see that side. Because Financial Juice, Forex Factory, a lot of times it can be delayed by a few minutes. But if anyone has Truth Social, then you're getting the news right away. So that's maybe something Henry will get later.
No news. But I mean, it's what we have been talking about in the beginning, right? That especially on Fed days and with everything going on, there might be huge moves in before. And again, I think for me personally, it's a huge surprise that we're been sitting for so long at this highs, given everything that was going on in the Middle East, right? So, and especially considering people not talking about the consequences of the oil shortages, that at one point sooner or later will also find its way through to the markets. And this is, I think, that will actually be a topic for this autumn and this winter, because all the storages, they are empty, almost close to empty, and so they need to be refilled. Yeah. This refillment needs oil flows, gas flows. Currently, nothing is flowing, right? And so everyone will be fighting for the same limited amount of resources out there. And I think this will actually be a topic for the autumn and winter. And I'm actually really curious what the Fed will tell us in its outlook in regards to their inflation expectations and those kind of things, because in my personal opinion, the market's completely ignoring it. It's like somebody told them not to write anything and not to say anything in regards to oil and those kind of things. but for everything what's been going on now for months. When did it break out? Was it April, right?
It was April,
May?
yes. Yeah,
April.
yeah.
So it's now like
Yeah,
April,
that's
May, June, July, August. Already like four freaking months, and
4 months.
the market's been sitting on its all-time highs, like plus minus 3-4% for like the whole time, right? It's at one point.
It's like a lot of people are like saying, "Oh, they're freaking out. It's selling off. AI is doomed." No, you guys, we are just retesting the levels because we had an overreaction. We were coming to the summer months. Now we're leaning into August, September, and all the market's doing is rebalancing. It's coming down, reshifting into other assets. As you see, Dow Jones is much stronger now, selling off into its gap. But because Nasdaq was the strongest squeeze to the upside, all it's doing is it's rotating. That's all the market's doing here. Markets aren't going anywhere. So focus that. Yeah.
I just want to say Dow Jones is really, really weak currently. Doesn't mean that it will stay like this for the whole day, but currently it's really like watch it on the chart.
Yeah.
Basically straight line down, right?
Yeah. Yeah. So you guys, Fed decision 2 p.m. Eastern Standard Time. Stay sharp. Stick to your plan. Like Henry was saying too, manage your risk, size down. That's all we can say. There's no financial advice, but the only advice we can give is to reduce the micros. If you really need to trade, drop a comment, you guys. Let us know.
Nobody needs to trade. That's the thing. Nobody
needs to trade. But if you're like, oh, Steve, it's coming into my demand zone. I just have to do it. You know what? Then put on 1 micro. That's all I can say.
Yeah. No, but guys, always be aware of, right? There's no such thing as this is it. This is the time. This is the level. It's especially intraday trading. What we're doing here, it's a grind. It's a slow grind. Each day you get a little piece of cake. You scale with size. Therefore, join Podia. Check out the code pre-market. And once you're in the live account, you can scale up your account. You're not limited to payout rules. You're not limited to any kind of weird hidden rules, anything. It's a clear structured path into a live account, and then you can grow from there. But it only works for you and for everyone if you are a consistent, profitable trader. So you don't need to trade random things. It's really all about getting in, doing the best A game you have, and sizing up day by day by day, reducing your amount of mistakes, amount of errors, as Steve is doing. Always my highest recommendation, basically pen and paper works the best. What back in the day when I used to trade full time, I always printed out for each day the charts, drew them in, like drew my trades in per hand, wrote on them, reviewed them on the weekends. Went through all of it, right? Next, also had my screenshots in place, my data, show, all right, what have I done actually, and how, like, had a clear chart and compared it. What did I do, and was an even better entry? So basically optimizing my entry, my exit, in terms of how efficient am I in this time being in the moment, right? And because post, like, if you watch it post hand, you're like, it's easy. I would enter here and exit there. But once you're in the moment and you're doing it in real time, there's always inefficiencies in place. And the further you can decrease these, the better you can function. Yeah. So, right, let's bring this thing to the end. Be careful, guys. Huge day today. Many news, many unexpected news. Actually, we should make a. Wait 1 second. Let me bring this in. I want to.
What are you thinking?
I have something fun in place. I want to try. All right. At what point, when will the White House start verbally to intervene because it went too far against the trend? At what time will they start? I think
it would have to be the low of the squeeze, I think.
Yeah, but I think it needs to be under 27,000. Maybe underneath the support area. And Trump is always watching Dow Jones. Dow Jones hitting 50. He has been celebrating it. So 50,000. It's basically.
I think he only watches Dow Jones. He only watches the old money index.
Yeah. Let's say 50. So I think my assumptions be, I call it the Trump put. Trump put. Just let's keep it in play. I'm just cautious.
The put support.
Okay. The Trump put. And so yeah, let's have it in place and see how far the market needs to sell off before we will see any kind of intervention and them trying to get it back on track. All right, everyone. Again, don't take anything for granted what we are talking about. We're trying to educate you, to teach you here and there something, to show you different variations to trade. And hopefully you will get a sense for considering both sides, right? The long side and the bull side, the long side and the short side, not only one directional trading, but being flexible to both sides. And yeah, if you have any comments, write them down below. Check up Steve accounts, Steve's newsletter, link in the description. Follow Podia, turn on notifications to get notified. And yeah, Steve, thank you for your time. And everyone, I wish you a good day, happy trading. And yeah, see you tomorrow at 9 a.m. Eastern time.
Yeah, thanks, Henry. Thanks, everyone. Stay safe. See you next trading day. Let's go.
Wait, I guess. Cheers, guys.